Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot. But before we go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. Investing comes with risk. To read more about it, please see the description below. The surprise oil cut from our friends at OPEC continues to give oil-related stocks like Magellan Midstream Partners LP, traded on New York Stock Exchange under symbol MMP, a company we profiled back in April, a pretty big boost. Since we profiled it, Magellan shares have climbed 22%, and the company has kept its quarterly distributions at around $1.05 or annualized at $4.19. And that's inflation crushing dividend yield of around 6.3%. Remember, inflation rate at the moment is around 2.9%. Before OPEC announced that it would voluntarily cut production by more than 1 million barrels per day this year, oil prices had been declining on a concern that interest rates are rising and a potential recession is looming. Since April 2nd, when OPEC made the announcement about production cut, oil prices have been increasing. At the moment, the West Texas Intermediate crude oil is trading at around $82 per barrel, and Brent is closing in on $86 per barrel. Some of the biggest winners in the wake of the announcement by OPEC and recent spike in oil prices has been pipeline stocks, including Magellan Midstream Partners stock. John?
Yeah, thanks, Mo. As the name implies, Magellan Midstream Partners is a master limited partnership that transport, stores, and distributes petroleum products, which is what midstream stocks do. The company has the longest pipeline system for refined petroleum products in the U.S., with access to nearly 50% of the nation's refining capacity. Magellan's infrastructure includes 9,800 miles of pipeline, 54 terminals, more than 100 million barrels worth of storage capacity for petroleum products, including crude oil, gasoline, and diesel fuel. In a nutshell, the partnership is basically a toll operator to oil companies. If the oil companies want access to Magellan's essential infrastructure, they have to pay for the privilege. Magellan's business model primarily involves fee-based, low-risk activities, which account for more than 85% of the company's future operating margin. But like other midstream companies, Magellan Midstream contracts include inflation escalators. In mid-22, the company's fees increased by an average of 6%. Moreover, the partnership's contracts are take or pay, which means its clients need to pay up even if they don't use Magellan's pipelines. This provides the company with steady cash flow, which is used to fuel its high-yield dividend and share buybacks.
Since you profiled Magellan, some big things have happened here. So if you want to explain what's happening.
Yeah, certainly. Back mid-May, the company announced a definitive merger agreement with ONEOK Inc. They trade on the New York Stock Exchange under the symbol OKE, with ONEOK saying that they were going to acquire all outstanding units of Magellan in a deal valued at $18.8 billion. The offer is actually substantial premium to its pre-deal price, with unit holders receiving cash of $25 per share, while maintaining upside from the energy upcycle with 0.6676 shares of ONEOK. So they benefit from both sides. This represents an implied value to each Magellan unit holder of $67.50 per unit, for a big 22% premium based on the May 12, 2023 closing price. Now, if approved, the merger will create the fourth largest U.S. midstream company with a combined enterprise value of $60 billion and initial yearly EBITDA of $6 billion. The ONEOK Magellan merger will be comprised of 50,000 miles of pipeline and related infrastructure. Assets will be roughly evenly divided between natural gas and liquids, which range from crude oil and natural gas liquids to refined products. And the company will become a national player, servicing basins from the back end in the upper Midwest to the Rockies and Gulf Coast. And it's a smart deal because the ONEOK and Magellan don't overlap their businesses. That means that even the highly merger skeptical Biden administration's Justice Department has few, if any, reasons to reject on antitrust grounds. And management expects to realize $200 million to $400 million in annual post-merger costs by 2027, which is expected to juice free cash flow per share accretion of, in the company's words, by more than 20%.
Let me ask, what has Magellan dividend looked like up to the planned merger?
It's been great, which is why I think a lot of income investors have been attracted to Magellan. Provided investors with 21 years of consecutive dividend growth. As mentioned earlier, MMP stock currently pays quarterly dividends of around $1.05 per unit, which works out to a yield of 6.3%. Magellan also returns value to shareholders through share buybacks. For example, over the last 3 years, the company has repurchased 26 million units of its own stock for $1.3 billion. And that actually reduced the outstanding total units by 11%. Now, I'm sure investors would rather the cash go into their pockets with an even higher distribution, but those buybacks have actually helped increase the returns from Magellan Midstream Partners stock. Since 2020, including the unit buybacks, the returns from MMP stock have expanded at a compound annual growth rate of 8%. Without the buybacks, compound annual growth rate would have been just 4%.
And now let me ask, does One Oak pay a dividend?
Yeah, it does. It currently pays a quarterly dividend of 95.5 cents per unit, or $3.82 on an annual basis, for a yield of around 5.8%. It also has a long history of raising its quarterly dividend too. They can't brag about 21 consecutive years of growth like Magellan, but there are plenty of examples of it raising its payout numerous times each year since it started paying a dividend in the mid-1990s. The only real stretch where it didn't raise it was at the start of the pandemic. It held it at 93.5 cents from the first quarter of 2020 through the fourth quarter, I think, of 2022. It has since raised it to 0.955 per unit.
And now let's talk about how has Magellan stock done since we last talked about it in April.
Magellan stock has been seriously outpacing the broader market. On July 27th, just a week or so ago, it hit a record high of $65.71 per unit, and that represents a 22.5% increase over the $53.67 per unit it was trading at when we last looked at it in early April. It's still trading near record levels at around $65.50 per unit. And MMP stock has actually been performing exceptionally well for years. Over the last 20 years, for example, with dividends reinvested, Magellan has returned profits of over 1,700%. Over the same period, the S&P has only gone up by around 360%.
All right, John, thank you so much. What's not to love about Magellan Midstream Partners stock? It is straightforward, primary fee-based model with built-in toll escalators, generates a strong cash flow, and that has helped support MMP stock's ultra-high dividend. In addition to providing best payouts in the industry, Magellan Midstream Partners share has been on fire lately. Should the merger with One Oak go through, unit holders will be part of a bigger, better company whose parent also value both a reliable growing dividend and long-term stock market gains. That's it for today. We'll be back with another video soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.